Podcast is now starting. All attendees are in listen-only mode.
Okay, good morning again, and welcome to Standard Bank Online Share Trading Webinar. Sadly interrupted slightly by rotational load shedding in this neighborhood. I don't know how many of you got thrown off. Unfortunately, the problem for me was my UPS is fine. It's roaring along, but the fiber went down briefly as well. So it just took a bit of time to get everything connected up. So can some of you please once again just put up your hands and confirm that you can hear? Thanks, guys. Very exciting to have Willie LaRue online here, world's best fullback. Not sure if it's the same one, but anyway. Right, let's get going. A little bit of admin there. And don't worry, we just have delayed the start by 15 minutes. We're just going to solidly go through the content that we've prepared for you. Okay, so what's the concept? Is there not another investable universe outside of South Africa, and how should we think about it? Last time we looked offshore, we looked at the ComServe sector, which has just been beefed up. Now we're just having a look at real estate. It's just very interesting from a couple of perspectives. The one is it's absolutely huge. I mean, it's only 2.5% of the SP 500 equity universe, but it's bigger than, more than half of the JSE in total market cap. So it's just absolutely enormous. And there are quite a few interesting company ideas, I think, to think about, and many different exchange-traded fund type options. So the principles of property are what they are. Let's not get too hung up about that. But let's just look at the biggest 5 companies in the sector, and let's just see if that helps us appreciate maybe not so much just the shape of the American property offering, but the difference. I'm more comfortable using the word property than the phrase real estate, but that's just gives away my age, I suppose. So American Tower Corporation, a little bit of irony coming on the names. American Tower Corporation does cell phone towers around the whole world. Number 3, Crown Castle International does cell phone towers, but only in America. So there you have it for those two guys. Simon Property Group, the biggest sort of traditional, what we would call a sort of mall type company, 54 billion market cap, old school shopping mall type business. Then Prologis, another very interesting one. They specialize in logistics real estate, what we would think of generally as warehouses. And then Public Storage, just quite amazing how huge, how dominant in the self-storage area, Public Storage, the company is. Far and away the biggest out of there are several other self-storage options you can look at. I just thought that's a little bit interesting relative to the fact that we've got a listed REIT here called Storage. Just quite interesting to think about that. So at the top 5 companies, we don't really have a listed cell phone tower business here at number 1 and number 3, and we also don't have a listed warehouse business. So straight away, you're getting a sense that the American property sector has a different shape, has different economic positioning and exposure relative to what we have. So it's going a little bit further into those businesses. I've just put the codes there. If you're interested, you can find them a bit more quickly. So American Tower, far and away the largest owner of cell phone towers around the world. Interesting, half their revenues from America, and then quite a chunk out of the rest of the world. Quite concentrated tenant base, which is the nature of the concentration in the cellular carriers. And just one stat that fascinated me, the tallest guide tower, those tall, slim towers with cables stopping it from falling out, those things get up to 2,000 feet high. And I, for my sins, once went up one of those Eskom tall chimneys out in the Mpumalanga coal belt. And those chimneys are very, very tall indeed. Trust me, they are, but they're only about 800 feet tall. So some of these towers are twice that height. Simon Property, 325 properties in total, about 22.5 million square meters. And just compare that again to South Africa, where we've got about 24 million square meters in total. Sales or trading density per square meter of about 100,000 Rand per square meter, so quite a lot higher than South Africa, and very good occupancies there just at the minute. Crown Castle, American base, and therefore even more concentration to those big four American cell companies. Prologis is quite interesting, and one of the most interesting things, arguably one of the attractive things for risk-averse investors, is just how diversified they are. They're a very, very long tail in terms of their tenant list. So they've basically found a way to set up almost sort of fractional utilization warehouses. So a very long list of very tiny clients sharing the capital asset which those warehouses are. And then public storage, yeah. A couple of comments on the behavioral dynamics of that coming down the line. So first point, these are all REITs, real estate investment trusts, and this has become now the thing sort of in the last 5 years or so. Similar definitions and rules here, where we used to have property loan stock and property unit trusts, and they've generally all changed into REITs. So net revenues can, in fact, must all be distributed to shareholders, but then the slight caution is in your hands. Those distributions comprise income rather than dividends. So tend to form part of your taxable income depending on how your affairs are structured. Again, here in South Africa, we generally have sort of the corporates owning their own warehouses. So the distribution centers or the big freight points like Value Logistics, whose warehouses are visited in Edenvale, or the big ones for Dis-Chem or Toyota or whatever, they tend to do their own thing here. And I think this is a very interesting point where particularly American Towers and Prologis, they've basically created a liquid tradable market for space in the category. So wireless assets, space on the towers or space in the warehouses. And once that market is active and liquid, then it's fantastic for both for the guy who owns that market, obviously, and also for the operators, because it means they don't need to tie up a whole bunch of capital. They can go take on a much more flexible route. Because bear in mind, if you buy your own warehouse, whether it's for a DC or whatever else, it's always going to be either too big or too small. It can't not. Whereas if you can tap into a flexible liquid market, if you need if you need to expand by 7% this year and 15% next year, and then shrink the following year, you can do it once the market's liquid. And that is quite interesting, and it's once again the sort of the American economy showing its logic and its muscles. And yeah, obviously we have malls and storage here. Okay, so just looking quickly at American Tower. This is just a map showing kind of how spread out they are. So yeah, a whole bunch of towers up in the good old Trump country, and then a bunch more spread across the rest of the world. The biggest physical market by tower count is India, 76,000. And for those of you who have South Africa tattooed on your left arm or something like that, MTN uses these guys quite well in Nigeria and in South Africa. And then just quite interesting, and this is from their own investor relations stuff. So, this is obviously them portraying a worldview, but I think this is thematically important. So the old school 2G cell phones are kind of almost coming now to the end of their life cycle. 3G quite active. 4G launched, 5-6 years ago. And we're now kind of in quite well into the transition into 4G. And it's expected that'll still have quite a good long life to go. Right through till, we're probably halfway through it now, but through till 2030, around about there. And 5G kicking in now and truly starting to grow, or forecast, should I say, to grow quite fast now. So a big planning thrust there is how to end up moving your existing tower fleet and obviously all your tenants and their requirements into the 5G world. Also from them, just quite interesting to have a look at the total number of devices, that top left graph. So the big growth is not really in non-Internet of Things devices. The growth rate there is only sitting at about 3%, but huge growth coming in from fridges reporting to the owner that the temperature's changed or that they've run out of eggs or whatever it might be. So huge growth in the number of devices coming through from the Internet of Things. But the data traffic is actually relatively modest. And the reason for that is that the explosion in data traffic is more from people doing video calls and watching silly videos on their cell phones and so on. I always get a bit sad when I hear That's his name, Jonathan Kabazela, punting what's trending. And there's some kind of often silly, stupid, or shallow video that gets punted. And that sells a lot of data, obviously, for, I think the sponsor of that show is one of the big networks, MTN or someone. But yeah, so the current growth in data traffic really is coming through from handheld users. Internet of Things tends to use much thinner data. You can see that relatively low growth profile coming through in the bottom there. Because obviously if your fridge has just got to tell Pick and Pay how many eggs there are in the fridge, that's really just a flick of a data point. That's not rich data necessary. But yeah, data growth still very high and going. And then also quite interesting just to understand how big, I mean, it's a bit disturbed by the projections into 5, 6 years time. But the US already is consuming more than 7 times as much data per account, per smartphone, than we do in South Africa. So the ratio is about 7.5 to 1, and set to get even much higher. That those Yanks are going to be chomping data. It's actually quite interesting to look at it the other way around, because in truth, South African GDP is only 10% of American GDP per capita, and yet we're using 13% of the data already. So we're punching above our weight at this stage, but we're not expected to grow as quickly. Our growth is expected to only come in data growth in about 30%, the forecast. Okay, then staying with cell phones, but looking at Crown Castle, what we've got here is we've got a company with a whole bunch of American towers, and then their big thing that they talk about is the small cells. I'll try and explain what I understand those to be shortly. And they've also got 65,000 miles of fiber, and that's quite interesting because that allows a whole lot of connectivity, which otherwise you'd have to put through in the air, and it just allows a much stronger and securer type of service if you can do it through fiber. Quite interesting also to have a look here. This whole 3/4 of their pie comes from just the big four telephony companies, AT&T, T-Mobile, Verizon, and Sprint, and all the others combined only come up to just over 1/4. And then I just picked up this, quite amused me. Tenants per tower. So on a particular tower, how many different carriers are there? Well, some they've got 4 or 5, generally 3s and 2s. And then they've got this fascinating category, which they refer to as having less than 2 tenants. In other words, 1 tenant, or presumably also not excluding 0, but that's their biggest. So a very concentrated market in America, and Crown Castle looking after them quite well. And one of the ways they do quite well is they dense up their capacity in areas where there's a lot going on. And I think just this is quite an important concept to properly grasp. Everybody wants coverage from their cell phone carrier. You want to be able to look at your phone and see that there's some bars on it and so on and so forth. But what's much more important nowadays, particularly with the fact that people want multimedia and music and video and so on, is that capacity is becoming almost more important than mere coverage. Coverage is taken for granted now, and people want capacity, which means yes, you can have a video call that's not jerky. So it's not about whether you can see the bars on your phone. So what these guys do to strengthen capacity is they show, and they've done it, and they do it all over the place. They'll clip small, fast, what they call small cells, using their fiber onto streetlights, onto utility poles, onto even in buildings and so on. So they will provide dense, high-capacity coverage, particularly in areas where there is a lot of demand. So it's completely different, evolved more into something of a more consumer, user-base friendly approach than simply dropping towers in and letting people suck it up now and again. Okay, so it's a bit about the towers, and then just staying in a slightly different world, Prologis. So as I said, these highly traded warehousing services space. So yeah, I spoke about that low concentration of revenue. So in fact, their top 25 accounts only bring in 19% of the rent. So this just highlights the difference, if you like, particularly from Crown Castle, where 3/4 of the revenue is from 4 customers. Here, one quarter of the revenue is from their top 25, 1/5, the other 81% from the long tail. And then quite interesting just to see where the activity is. So most activity is in building for distribution, particularly with an e-commerce thrust at the top of that graph. And the reason for that is obvious. Total returns are forecast to be higher. So logistics is seen as the best performing area for the next while. And that's just quite interesting. I think one needs to be careful about totally getting drawn into company forecast, expected higher returns, etc. Obviously, companies have got to be optimistic and take a view and implement it. But where things go wrong, and I think in a way, a company like Sasol has gone charging into converting ethylene into plastic and so on down in Louisiana. And it's quite interesting how, because everyone else has seen the same gap, suddenly that whole growth that they planned and built for took them decades and lots of faffing around. If there's overbuild, which is maybe what Sasol's up against now, then you start seeing a collapse in the polyethylene plastics prices. So again here, if too much development goes into warehouse and logistics, then these guys might start seeing underperformance from total returns. But at the moment, it is expected that they're going to be doing better than office or retail, or apartments for that matter. The Simon Property Group, it's just quite an interesting one. This is a real sort of American dream type story. Okay, great input coming in there from Trevor. In the 60s, two brothers started out as rental agents and then began to develop. And their approach, which was kind of clever in the 60s because nobody had thought of it, was to secure an anchor tenant, secure finance based on that, and then to let out the balance. And they also were early adopters of turnover clauses. So yeah, they done really well. I mean, I think sadly, the one brother died some time ago as a dollar billionaire. The other one's still alive, worth $3.5 billion or something. And they did so well out of property. They went into movies where they did less well. But anyway, that's the American dream for you. And now one of their sons, David, and the other one's nephew is the chairman. And it's just quite interesting. I dropped in a couple of pics here from a big American mall. This is not one of theirs. This is when they tried to buy the company that owns this and didn't get it. But what you see at the top is electric vehicle charging points. What you see in the middle is an Amazon bookstore. This is in Portland, Oregon. And then what you see at the bottom, in the self-same mall, a very glossy, polished floor mall, is a Tesla showroom. So they're not really selling cars as such, but they're selling the brand here as Mr. Musk does so well. And it's just quite interesting to think about, all the anxieties in South Africa where we've lost Garlic, Studdefords, John Orrs, Anstey's and so on. But we're watching Edgar's with interest right now. In Washington Square, that mall that those pictures are from, you still have, and they traded quite well on the day I was there, Macy's, Nordstrom, JCPenney, Sears, Dick's Sporting Goods. So quite strong anchor tenancy still. And yeah, the big reason, I guess, is that the American upper middle class and lower middle class is huge. And that upward mobility and that desire to go and experience mall type retail experience is still a bit more economically viable over there. They do have, like here, some of the big stores, particularly home goods and home improvement and hardware and so on. They like you to drive up, a bit like Macro does here. Amazon does seem now to be, funny enough, to closing a lot of these stores. I think they had 37 at one stage across the States, now closing a lot of them down again. And yeah, so the secret for a mall company, I guess, same here, there, anywhere else, is keep a decent tenant mix, keep your occupancies up, and try and avoid overbuilding. And then public storage, yeah, this is all about the psychology of hoarders. So they're huge. They're way the dominant self-storage business in America. And you can see they're also active in Europe and in commercial property, but relatively simple to understand business. Their network they regard as larger than their next 3 biggest competitors combined. So big brand recognition, and they pump that. They reckon the scale allows them to cost effectively sell over the internet, which is quite interesting. And just what where does this work? Well, it flies really in cities, particularly where space is a problem, and particularly where those cities are rising. So they're doing much better in the likes of Southern California than they're doing in the likes of the old Rust Belt, where space is still tight, but where there's no money. So what you want really is you want upward mobility. You want people to be upgrading, getting more stuff, but unable emotionally to get rid of their old stuff. Having tight space in elite penthouse apartments and so on, which is what you got in the Manhattans and the San Franciscos and so on. And also downside. Interesting to see how big they are in the likes of the sort of retirement belt states, Arizona and Florida and so on. Again, where people just really seem to battle with the slightly blunter approach of saying, I'm going smaller and I'm taking less of my stuff. It's quite fun also in their annual reports to read about how they report on their same store properties, and then they have another category which they have developed a brilliant name in their mind for it of non-same stores. Those are the new ones. So occupancy is already up in the 80s with those ones and a slightly lower revenue per available square foot. To me, I think one maybe slight cautionary point about self-storage is it's kind of great, but what happens when people stop sticking stuff into storage? Well, what happens is they end up on TV trying to create shows about people paying $100 or whatever to find out whether there's a lot of value or none in that particular storage unit. So I think it's a business that's typically set up to outperform in good times and then way underperform in flat or down times. So that's just quite interesting. But I suppose no different then to storage, the listed one here. So would you rather do it in the States or in South Africa? Where do you foresee stronger for longer economic growth? Okay, so if we just look and try and wrap up now, so we've got a bit of a chance for discussion. The scale of the capital employed here is just enormous. It really is. Sorry, that should be half the JSE. Some of these slides have finished being updated. The nature of assets is kind of different. And yes, as Trevor has very kindly pointed out, we do have some logistical warehousing specialty here, but not nearly on the same scale of Prologis. It's also just a little bit of a concern, I think, unless you know exactly what's going on. Certain of our property assets have been under various forms of scrutiny for maybe interesting practices relating to trading in their own stock or reporting on their own affairs. It's obviously quite a tempting thing to do when you look at a property company and say, well, what are your assets? What are your what are your rentals? How are you valuing it? And if a lot of the income statement is driven by changes in price of underlying assets, you can have an income statement which might turn out to have a lot of tissue paper inside it rather than dripping with gold. And also a lot of the diversification from here has been up into Europe. The Donny Gordon move up into London, and quite a lot of assets accessible now into Eastern Europe. So to me, this, if I was a property fan, if I was looking to investigate, I think I'd probably be more drawn. Maybe it's a function again of my risk appetite and my perspective. From a diversification perspective, rather than going from the emerging market in South Africa into Romania or Poland or somewhere, I think I would feel a lot more relaxed with the diversification I could achieve by going into the US. A couple of ratios there for those of you who need and want and can use that sort of thing. And the short and simple here is that these are not cheap, particularly those tower companies, quite expensive on a PE ratio, but again, different arithmetic applies because of the distribution dynamics, and relatively modest yields compared to what you can get as a rand yield in South Africa. But I think if you consider what you can get for cash in the bank in South Africa, or what you have to borrow to get cash out the bank, so clearly you don't want to be borrowing at 10+%. To be buying something that's going to be paying you 7.5% unless you're extremely confident about the growth. And obviously dollar interest rates in particularly for good quality bank clients in America, are way lower. So the rate differential is largely a function also of the different interest and economic environments too. Now, you can obviously go in for those single companies, and there are a whole bunch more than just the top 5 we've had a chance to look at this morning. But you can also look at some exchange-traded funds. These are the biggest ones. $33 billion Vanguard fund. There's a couple of quite big $3, $4, $5 billion from Schwab and iShares and so on. And just quite interesting that the beautiful column here to me is the expense ratio. The management companies definitely take out a very, very thin slice of fees. That 0.43 is an absolute outlier if you go and look at a few more of these. But obviously don't get trapped by that, because if the path you take to buy into one of these funds involves someone else sitting and taking a cut, then you might end up, even though the fund's expense ratio might be low, your cost structure might be quite a bit higher. What you also see is that the recent returns over the past year have been high, which generally means obviously these things are a little bit expensive. And then just a range, again, of different yields coming out of these exchange-traded funds. And yeah, just a little bit of narrative. This is, I find, quite a useful website, etfdb.com. If you want to go and have a look, you can get quite a nice insight into the total range. Also, always just amuses me how it takes remarkably short time for the investment industry to create a bigger universe of ETFs than there is a universe of companies. So it's amazing just how many ETFs and investment products and unit trusts and so on and so forth there are relative to the relatively small universe of actual corporate entities. Okay, so to wrap up my view on what's happening here, I like the diversification. I like those liquid market business models. I like the scale and liquidity and the choice of companies and ETFs. I think for me, being far away and not feeling on top yet of the detail of these companies, I would probably look at the ETF route. REIT structures, obviously just that pass-through of the income, but and please understand, this is neither tax opinion nor advice. Your own circumstances are what they are, but passing it through without taxing it in the company obviously means the tax is going to get clipped at some stage. Recent price action being strong, but I think the asset allocation argument is really the one that's the most appealing here. One question about about properties: what about Amazon? What about e-commerce? And I'm saying yes, but you know, there's certain things that people are still going to typically go and get. When you've got an automobile-dense society like America, or like we are here, just look on the freeways in the middle of the tough economic times we're having. It's not going to totally happen. And in any case, logistics looks set for growth, and the data coming through on those towers is probably also good. The anchor tenant collapse. Well, I think the biggest thing really there, as I tried to highlight with those pics from Washington Square, is just the much slicker, much more high-end malls, because they're servicing a much richer middle class. That's ultimately the difference. So I think it's a wonderful offset in terms of capital allocation. I don't think it's cheap, but you know, good assets seldom are, and more appealing, obviously, just obviously don't be silly. Don't click and ask afterwards. Just find out that you've got a decent platform, a decent cost structure, and a decent way to get either your remittances, if you're going to need them at some stage, or to be able to bank and realize your gains. So thanks very much, everybody. After that little ESCOM wrinkle, we've got half an hour done. All the slides are numbered, so if you want to, you can obviously guide me back to put a particular slide back on the screen if you want to have another look at it. But let's see if there are any questions. Thanks again, Trevor, for that correction. And yeah, just the SBG securities disclaimer, you obviously need to take that as read as well, or you can read it all. Freeze your screen and then you can read it as slowly as you like. Okay, thanks everybody. Let's see if some questions are coming through. And on behalf of Jabu Mabuza and company, my apologies for the power wrinkle, which affected the cabling in whatever we are, zone 2A here. But we managed to bounce back. and get back here. Okay, Willie, I can be reached through Twitter on, there we are, or you can email me on stuartdaa@gmail.com. I'm not sure what you want to talk about, but if you're a Cheetahs fullback appreciator, or Griquas or Paul or whatever, I'd obviously love to chat to you. All right. Are there any other questions on the US property sector and the shape of it, the nature of their malls, the nature of warehousing there rather than here, and maybe Trevor can guide us through some of those points. And I think maybe the most interesting here is just these two enormous cell phone tower companies, really intriguing, and I think to think if you want to really invest and get out of the sort of negative paranoia which some South Africans sadly suffer from, to at one click to be able to buy into a business with a spread of assets across all these economies, some very mature and with data growth, and some with connection growth and data growth. Quite an interesting one. And then obviously also just interesting to consider the ETFs. All right, are there really no other questions on that? Willie, I will email you as well, straight to your email address, which I'll be able to find through the GoToWebinar software. Otherwise, if there are no questions, then thanks very much. Let's wrap it up. So several hundred billions of okay, a little question coming through here from Mark. How do US property ETFs compare with European and UK's? Yeah, that's not a journey that I'm ready to report on at this stage here. I definitely do look. I think just the fact that you asked that question, Mark, fantastic. That a South African sitting in on a little investment webinar here is comparing now two much bigger, grander asset classes. Rather than trying to worry about whether you're going to get long, the Class A or the Class B part of Fortress or something. Much more worthwhile to exercise your mind, wondering about what's in that basket, and scratch a bit, see what you find. If you find something interesting or something you'd like me to have a look at, definitely don't hesitate to let me know. All right, so those big companies, and then very high level look at this stage, but quite interesting also just to pop inside and tour around a bit on this ETF, db.com, and pick and choose. Takes a little bit of a while to deconstruct some of the ways they do tend to, I think, to overemphasize recent price action. The year-to-date price leadership is a prominent one here, where they obviously, the Americans like to buy hot assets, which obviously makes for a liquid market, but ultimately to me is a little bit like chasing a tail. And then a last question coming in now from Dean: which economies to invest in? Dean, yeah, I just think the obvious question is to say, depending on where you are in your life, if you're 85 years old and you're sitting chilling on the south coast of South Africa, all you really need is some income to chill on the south coast of South Africa. So you don't need to get too smart about investing far away. If you're younger and have got more time exposure available to your capital, I really think it's important to apply your mind to investing in the other 99.5% of the world's investable assets. So definitely no glib answer to that question, but I think it is important for you to consider whether or not you should have some exposure outside. More than that, I don't think I can really cover in a question on the fly like that. Okay, otherwise, Jarina, nice to have you online again. Okay, one last one from Mark. Just the range in dividends coming through from the ETFs. Yeah, the different companies underneath will tend to have different ones. And, you know, this IYR one, which is actually on the middle of your screen right now, a more liquid alternative that comes with a steeper price tag. So that's been hot property. Sorry, has had quite a lot of attention onto it in the last while. So its price has shot up, and that's obviously it's not just the 1 year return. It's done well for a recent while, and obviously different mix of assets inside it. Okay, thanks everybody. Appreciate having you online, and glad we were able to overcome that slight wrinkle from the power out on the fiber network here in Parkview. But yeah, get back on with the rest of your lives, and see you next time. Cheers, everybody.